Welcome to the first edition of Market Wolf. I am the Market Wolf, and we're going to take a look at the S&P 500, the VIX, and Uvxy, and tie these all together in a nice, neat bow for you. Should you take my advice as a financial advisor? No, I am not. But you should pay attention to the charts. Let's go over the charts now. We see the weekly here on the S&P 500. We seem to be creating a head and shoulders pattern. Here's the left shoulder. Here's the right shoulder. Let's see if that holds true in our lower time frames. The EMA lines are in good order here, but you can see that 20 is on its way down on the 20-day. So let's take a look and see what's going on. We take a look at the daily, zoom in on that time frame, and we can see that it looks like the EMA lines are attempting to straighten themselves out here from that previous bullish divergence that we were on. And so as these lines straighten themselves out, that is going to have some implications for us within the lower time frames on the S&P 500. So let's take a look at the hour. The hour on the S&P 500, key to pay attention to, exiting volume, a large amount of exiting volume towards the end of the trading day on Friday. Everybody expected this trading day, well, a lot of people anyway, expected it to be in the green because, hey, it's Friday and Fridays are always green. Well, I called it. I told you it was going to finish red, and it did. So if we look here at the bearish divergence that's going on, we're getting bearish here on the hour time frame. Very bearish because we've crossed all of the EMAs. We actually crossed the 200 as well. Very, very bearish. Now we did pop back above the 200 here briefly. We'll see how this continues to play out. Remember, back on our higher time frames, we're still trying to straighten out the EMAs on that previous bullish divergence. So I wouldn't be surprised if we see more chop here throughout the day tomorrow. We might open coming up, green. We may actually, if you look at the volume, it's decreasing exiting volume, right? So we may come down and touch 446 and then pop back up. But regardless of which way it goes to start, we are going to have some chop. But overall on the hour, very bearish. Let me switch briefly to the 2 hour because that's an important time frame. I don't want to leave that out. And let's see what's going on there. Again, we can see that we've got a bearish divergence occurring. We haven't crossed the 200-day, but still just crossing the 100 is very bearish, at least in the short term. Okay, so we've got confirmation there with that on the 2 hour. Let's take a look at the 30-minute, and again, we can see an example of what I'm talking about. The 30-minute is basically showing on the 20 and also the 50 exactly what I was speaking to as far as, look, I told you Friday, as this was playing out, we saw the 20 cross. I said, this is a fake out. People are going to look at this. They're going to think it's a bullish divergence. They're going to think, oh, wow, we're going to pop back up. We're coming back up, right? We've hit bottom. No, we haven't. We've crossed again back into bearish territory. Why? Because we know we're bearish on the higher time frames, and we know on the daily, look, it's trying to finish that old bullish divergence. Now, does that mean the market can't go up? Sure, it could. I can be completely wrong. I'm a fallible man, right? But and we can't rule out the market manipulation side of things. We've seen that, as I've said repeatedly on my posts, with the exiting volume and the incoming volume especially. Not so much the exiting, I misspoke, but especially the incoming on that previous rise up where you just, right here, where we just were skyrocketing. Every time you thought, hey, we're overbought, it should be ending, we'd flag, we'd cool off a little bit, and then we'd keep going. So, and then again, the minute candlesticks, simply astounding how the minute candlesticks, you would have suddenly this huge influx of volume in 1 minute. Nothing suspicious there. And of course, every time it was towards the end of the trading day at a place on the chart which would make absolutely no sense for any algorithm or person who was looking to trade rationally. So, don't rule out manipulation point there. Let's move on to the VIX. Here's where we're going to get into some interesting stuff. And again, this is going to get into the bombshell information I have to offer you here today. This is something we're going to need to watch together and pay attention to. So you see on the VIX here that we are in this downward channel, that we are being sucked down. And oh no, look, if you look back here, you know, previously we were popping around between the 20 up and down, right? But if you see here, we've got this bearish divergence, and you think, oh, we're coming all the way down, we're going to go back below the 20 again. Very bad for Uvxy if you're a Uvxy bull, but that is the short-term picture. Let's take a little bit longer of an outlook here on the VIX. Now here's the interesting information that I've come across. You can see here on the VIX that what we've been doing is we've been putting in higher lows. We've been putting in higher lows. And some people have called that out, but I'd like to direct your attention up here. We've also been putting in lower highs. Well, what might that mean? Well, let's do some speculation. If, indeed, on the VIX, we are entering into a symmetrical triangle here, okay? If that's what's going on, and we consolidate, coil up, and then eventually what's going to happen? We're going to pop up or we're going to pop down. Now this probably, whether or not this pattern plays out, it's questionable. It all really has to do with what the Fed is going to do. Okay, so what might the Fed do? Well, if the Fed is planning on continuing with even some interest rate hikes and they continue to talk about it, I think you definitely see the VIX begin to consolidate, really kind of maybe stay above the 20. If the market figures out that the Fed is not serious, if they don't go through with interest rate hikes, at any point the market decides the Fed isn't serious about this, I think we see this break down. I think we see this whole pattern break down, and I think we see the VIX cool off tremendously. But right now, we need to pay attention to this pattern. This is that bombshell information I'm talking about, especially for you Uvxy bulls, because if you're a bull on Uvxy, you definitely want to see volatility staying above that 20. Okay, so what could this mean projected further into the future? Well, look down here. As this begins to coil up, right, if this pattern holds true, you know what October is, don't you? October is when most market crashes occur. And we already know that the 10 and 20 have crossed, okay? And that's indicating a certain stock market crash average on the next 14 months. It doesn't have to be 14 months. It could be tomorrow. It could be in October, as I'm pointing out. Remember, most of these occur in October. I think anywhere from possibly August to November, you're going to be looking at something happening. I'd be hard-pressed to see us get to December with this coiling action, but it could. But in any case, Fed gets serious with the tightening. Let's go with the quantitative easing. We're going to have a major breakup in volatility. That is good for Uvxy. Let's get to Uvxy. So again, just like on the VIX, what do we see happening here? Well, we see on Uvxy, very similar, right? We're putting in a lower high. Now, are we putting in? We're putting in a lower high. No. Yes, that's right. But always confusing. But the question is, are we going to start putting in higher lows? We're going to see the same coiling. Well, Uvxy is different. You don't chart it that way. Probably not. Okay, that's probably not what we're going to see here, but I just wanted to draw your attention to that. Of course, we have the Theta Decay, and that's why. We've always got Theta Decay going on, and a large part of what Uvxy does not depend only on the S&P 500. It also depends on the VIX, and we've seen that. You've seen days where the S&P 500 is down, but Uvxy is also down, and you're like, what's going on? I've seen it in the comments. You have got to understand that the volatility matters as well. If SPY is over here flagging out, right, it's cooling off, then volatility is probably cooling down, and that means even though SPY could be having a down day, you're going to see Uvxy going down as well. So we need the perfect recipe for this. Now, a lot of people say, well, hey, what are you waiting on this big jump for? Because a lot of people got sucked into Uvxy thinking, oh, I'm going to make thousands of dollars when the market crash happens. Well, you could make thousands of dollars. It depends on how much you invest. But let's get specific here. So you know exactly what's going to happen and you can have a plan, an enter, and an exit strategy. I'm not telling you how much to invest. I'm not telling you that you should. I'm just saying that this is what I'm doing is I'm investing, I would say, roughly 25% of my portfolio in Uvxy. And this is short term. And you're thinking, well, why would you invest long term? Well, for the very reason I'm pointing out here, it looks like short term volatility is going to be around to stay potentially. Could I get wrecked? Yes, obviously. I think anybody could playing this game. It's dangerous. All right. That's why I don't have my entire portfolio in it. Some people I see it is concerning. I know the game I'm playing. It's dangerous. All right. So moving on, let's take a look at the bigger picture here so you can see just how much money you could potentially make. Let's go back to, fun. I think it's reset on me. I tried to be speedy for you all, but it has decided. All right, that's okay. We'll get back. So let's just, we'll keep it on the daily. Let's consolidate. Feel free to forward past this. By the way, if you have kids, you understand I also have children, 4 boys as a matter of fact, and so if you hear anything crazy happening in the background, well, it's probably them. Let's drag this. We want to get to back when we had, here we go. This is what we want to look at, right? This is what pulled a lot of people in. Okay, so consolidate that a little more. Let's take a close look at this, okay? Now, a lot of people see this top number here, 1,359, somewhere around there, 1,347. Oh, I'm going to make that much money when it pops up. No, remember, Theta Decay, right? This has Theta Decay. It is decaying over time. We're not at the same level here from this launching point that we were previously. Here you were at $116. Let's do a measured move. And let's take a look and see, well, how much money could I make? Well, let's say you got in close to the bottom. Let's say you were all in, close to the bottom. Let's say you got out at the very top. Now, those two things are obviously not going to happen, but they could happen. You see, it's a 798% move. We'll just round it up to 800% to make it a nice even number. Average, maybe you could have done 800%. If you're averaging out, you're being careful. You got in and out at probably somewhere on average. Maybe you made 500% if you were lucky, right? Okay, so let's take that same idea, all right, from our price point that we are at right now. We are at, $13.10 right now. So let's do a measured move from there. Let's go up even 800%. Let's just say you make it 800%, right? Well, that's way too high, isn't it? Whoa, we got to keep going down. Wait, you're telling me that's 2,000. What's happened to that price? Oh, no. See, this is why you have to understand how much money you stand to make. So let's say 800% right about there. Roughly 119, we'll round it up. We'll say $120 you could make if you're in and out at exactly the right times. I'd say if you're averaging that in and out and you're going to be a long-term holder, maybe you stand to make 50 a share, right? As you average out and you're being careful, maybe more if you get it just right. Now, what we can do to make more money on this is we can play the VIX and Uvxy and watch them and make money every time it goes up, because we're going to have that opportunity now all throughout the month of, it looks like up until possibly October, right? We don't know how long this is going to go, and it, of course, depends on the Federal Reserve. So, this is Market Wolf. Going to sign off. Hope I didn't forget anything. Leave comments. Share your charts. Let me know what you want to see. If there's anything else you want to see, I'm happy to do that for you. And, hey, it's been fun. This was a good time. We'll see you next time on Market Wolf.